Welcome back to The Explainer. Today, we're demystifying a real heavy hitter. We're looking at Boeing's Q2 2026 earnings report, which officially dropped on July 28, 2026. Now, if you follow the aerospace sector at all, you know this company has been navigating some, well, incredibly turbulent skies lately. So let's treat this quarter's numbers as a critical checkup, right? We're going to look at their operational health, their financial stability, and honestly figure out what their path forward actually looks like.
Okay, let's dive right into this. Right at the top of the report, Boeing CEO Kelly Ortberg sets a very deliberate tone. He says, and I quote, "Our focus has been on restoring trust, and we are now building on that through a sustained focus on safety, quality, and on-time performance." Before we even look at a single spreadsheet, leadership is signaling that this isn't just about dollars and cents right now. It's really about stabilizing the company's very foundation and culture.
So here's our roadmap for the decode. First, we'll hit the Q2 2026 headlines. Next, commercial airplanes deliveries. Then defense, space, and security, followed by global services performance, and finally, a record-breaking backlog. Let's get to it.
Section 1. The Q2 2026 headlines.
The very first number to hit us is this massive revenue figure, $24.6 billion for the second quarter. That is an 8% increase year over year. For an industry that literally watches Boeing's every single move, this solid top-line growth is a pretty strong signal of returning industrial momentum.
But there's a fascinating dynamic tension in their finances right now. On one hand, we have that impressive 8% revenue increase, plus a positive $0.6 billion in free cash flow. And listen, that cash flow metric is a massive survival and flexibility indicator for Boeing right now. However, the company is still reporting a core non-GAAP loss of 76 cents per share. So, what does this all mean? Basically, the revenue engine is revving up, but overall profitability is still heavily weighed down by those ongoing operational and developmental costs. And hey, just a quick reminder for you all, we are pulling these exact figures directly from the source, Boeing's official Q2 news release. We're keeping our analysis completely objective and grounded strictly in the reported data. No fluff, just the facts.
Section 2. Commercial airplanes deliveries.
And this brilliantly illustrates where that top-line revenue growth is coming from. It becomes incredibly obvious when we track the delivery volume. Look at this. In Q2 of 2025, Boeing delivered 150 commercial airplanes. Fast forward to Q2 of 2026, and they hit 171. That is a 14% jump year over year. In the aerospace business, deliveries equal cash. Getting those finished aircraft out the door was absolutely the engine driving that $24.6 billion total revenue.
So what operational milestones are actually driving this segment's momentum? Well, two massive things. First up, the 737 program is officially transitioning to a production rate of 47 aircraft per month. Getting that narrow-body volume up safely is absolutely crucial. Second, and honestly this is huge for their future wide-body market dominance, the 777X finally received FAA approval to begin certification flight testing. That is a monumental regulatory hurdle cleared for their next flagship aircraft, keeping them right on track for first delivery in 2027.
Moving right along to Section 3, Defense, Space, and Security.
Now, this segment brought in $7.5 billion in revenue, but man, it was really a mixed operational bag this quarter. On the positive side, they hit some major milestones. The Navy's MQ-25A Stingray completed its first flight and was cleared for low-rate initial production. The Air Force's T-7A Red Hawk also began its initial production phase, so great news for the future pipeline, right? But despite those wins, the segment still recorded a negative operating margin. Why? Well, primarily due to a $280 million loss on the VC-25B program. Yes, the new Air Force One. It continues to be a bit of a financial black hole, requiring massive investments in extra production and certification resources.
Section 4. Global Services Performance.
Global services often operates quietly in the background, kind of like the steady, high-margin engine of the entire company. They pulled in a very consistent $5.3 billion in revenue, exactly matching last year, but more importantly, profitability remains a remarkably strong 18.1% operating margin. While it's a slight dip from last year's 19.9%, which by the way was largely due to a digital aviation divestiture, it is still incredibly robust. And this margin is supported by fresh, highly lucrative contracts, like a new award to provide PAA training systems for the U.S. Navy and a brand new agreement to integrate their virtual airplane training solution with Alaska Airlines.
Section 5. A record-breaking backlog.
Now, what's really interesting about this is the sheer scale of the global demand for Boeing's products. It is staggering. They are sitting on a monumental, record-breaking total backlog of $715 billion. Let that sink in for a second. $715 billion. The vast majority of that future revenue is locked up in commercial airplanes, $596.7 billion, which represents over 6,200 commercial airplanes just waiting to be built and delivered. Defense makes up a healthy $85.3 billion, and services holds $32.8 billion. The market demand is undeniably there.
Which brings us to our final thought for today. With a historic $715 billion backlog sitting in the wings, can Boeing maintain its momentum in safety and quality to successfully execute all these deliveries? The global market clearly wants their airplanes. But, as Kelly Orberg noted at the very beginning of our explainer, this is a transitional phase. Their ability to stabilize operations, restore trust, and flawlessly execute on the factory floor will entirely dictate their ability to fulfill this massive backlog. It's going to be the ultimate test of execution for the aerospace giant moving forward. So what do you think? Thank you so much for joining me on this explainer. Keep analyzing the data, stay curious, and I'll catch you in the next one.